Thank you, Lex Concorda.
It has been very positive to see that the Joint Oireachtas Committee report on pensions has created debate, not just around the retirement age, but the broader issues related to pensions and the funding of them into the future. One of the key issues that for the committee in overcoming our pension challenge over the next 50 years is the introduction of legislation banning mandatory retirement in employment contracts, both new as well as retrospectively being applied to current work contracts, giving people the option, if they so wish, to go beyond their present retirement age. It is the view of the committee members that it would be wrong to force people to retire at 65 and then have them wait until 68 to access their pension. And while some preliminary figures were available to the committee on the potential costings of providing a social welfare payment to people between their 65th birthday and accessing their state pension at 68, these could not be robustly extrapolated into actual costs to the state for such replacement supports. For me, the bigger issue here is if we remove the forced retirement requirement to retire at 65, I believe that many workers will continue to remain in employment. I'm of the view that this is not just because of the changing nature of work, particularly here in Ireland, where we're moving from more manual employment to technology, even remote-based, which allows people to continue to work longer, but also because some of the financial realities of living in Ireland today mean that people will have to work longer to be financially secure in their retirement. According to the Banking and Payments Federation Ireland, the average borrower age is now 40, with an average loan term of 22 years. And the Central Bank has highlighted in a report on household lending that almost 50% of new first-time buyer loans in the first half of 2018 had a loan term between 30 and 34 years. These facts leave little time for people to build up personal savings before they retire after clearing their mortgage. Furthermore, many more people are starting their first full-time job well into their 20s, which will leave them short on receiving a full contributory state pension by their 65th birthday. The committee considered a technical paper produced by the Pensions Commission, which pointed out while increasing the state pension age has the greatest impact on reducing pension expenditure, a substantial increase in the employment rate of older workers of 10 percentage points by 2070 would reduce future expenditure. The paper points out to a small difference between increasing the pension age to 68 compared to increasing the employment rate of older workers by 10 percentage points over the next 50 years. In fact, this small difference has already been addressed by the higher participation rates that we've seen due to remote working during COVID-19. Now, surely, if there was as much effort put into removing the barriers to facilitate older people working longer as there has been into pushing up the retirement age, then I believe that it is within the capacity of our country to increase the number of older people working by an average of 0.2 percentage points a year over the next 50 years. Now, there has been an argument that if you allow people to work beyond their 65th birthday, you would close off promotion opportunities for younger staff in an organisation. However, the civil service has overcome this challenge for senior positions by filling such posts on a 7-year basis, thus allowing new thinking and younger people to compete for such roles. Now, there's no reason why, for a change, that the private sector couldn't take a leaf out of the public sector book. The final point that I want to make, and that is that the Social Insurance Fund was in surplus to the tune of some €4,000 million at the end of 2019. It's gone into deficit, as we know, over the last couple of years due to payments for the COVID-19 pandemic. Now, the Commission has reported in its recommendations that the pension element of the Social Insurance Fund should be put into a separate fund. I believe that these funds should be invested just like private pension funds. Now, we've already made this policy decision when we established the National Pension Reserve Fund. Do any of you remember that? It was generated from the sale of Telecom Éireann, which was invested in the financial markets through the NTPF until it was cashed in to bail out our banks. Today, we should put the excess corporation tax receipts into this new fund to kickstart that fund and put Ireland on a sustainable roadmap for the future of our state pension. So, in conclusion, Minister, the point that the committee has made is that we have looked not just at the very tight, constrained remit that the Pension Commission was given, but we've looked at the broader issues that are there in terms of increasing workforce participation rates. Like, we are saying that workforce participation rates won't increase to any great extent over the next 50 years. However, we have managed in 2 years to increase the workplace participation rates by 3.1% because of COVID-19, because we've introduced flexible working arrangements that have facilitated more women to participate in the workforce. They have facilitated people from rural communities to obtain higher paying jobs in urban areas because they can now work remotely. We have seen a phenomenal shift in 2 years. Now, sadly, and previously, and Minister, you were across the table from me when I was arguing in relation to promoting remote working, which sadly was falling on deaf ears at the time. We had to have a pandemic to actually see the difference that this can make, is making. Now, it has changed in 2 years the baseline that all of the projections that have been put forward by the Pension Commission were based on. I have argued with you here today that using the current baseline and actually supporting older people to work beyond their 65th birthday would actually bring in the same amount of money as increasing the pension age to 68. Now, surely it makes far more sense to support older people, giving them the dignity of being able to continue to work, rather than forcing them into retirement at 65 and forcing them to go and draw a social welfare payment. People who have worked all their lives, have worked hard all their lives, and telling them at the end of their working life that they have to go and draw a social welfare payment for 3 years until they get their pension. I think that's wrong. I think it's wrong when there are options there, when we can actually support and encourage those people to continue to work. And let's, once and for all, get rid of this archaic law in this country that prescribes that people must retire at 65. Now, I will be told that, oh, you can't do that because you can't have legislation retrospectively. Well, we've seen over the last 10 years that that could be done. People's pensions were reduced to deal with the financial situation that we had in this country. We have seen where things were done in the last 2 years, we were told were constitutionally not possible. If the willingness is there to do it, we can bring forward this legislation. And that single measure in itself will do more to address the pension deficit that we will have over the next 50 years than tinkering with any retirement age.
Just while you're on your feet, Deputy, you approached your seat with such haste. I can't remember, did you formally move the motion?
Oh, I didn't actually. Can I formally move the motion?